Hello and welcome. In this episode, we will examine the evolution of the new Income Tax Bill 2025. Friends, the current Income Tax Act was introduced in the year 1961 and it was applicable for the assessment years commencing from 1/4/1962. The current Income Tax Act has 47 chapters and 819 sections. Friends, one may wonder how come there are only 298 sections, but how can it is said there are 819 sections? Actually, though the number is only 298, but you have some alphanumeric sections. For example, 80C, 80D, 80E, or 44AB, 44AD, like this. So if you count all those sections also, the number of sections will run into 1819 sections. Friends, the current Income Tax Act 1961 was amended 65 times. Every year you have a Finance Act wherein the amendments are brought, and there were around 4,000 amendments. These 4,000 amendments were made in a span of 65 years. Friends, the current Income Tax Act has become bulky. Why it has become bulky is a question. Friends, in fact, this was drafted in the year 1961. Thereby, we can say that this drafting is a traditional drafting. Also, there are many amendments for the time as we discussed. 4,000 amendments were made around in the 65 years span starting from 1961 to 2025. Thereafter, in order to keep pace with the judicial pronouncement, some amendments were also made. For example, the honorable courts will interpret a section in a particular way, but the intention of the revenue might be different. Or at times, various judicial pronouncements may be given in respect of certain words. These words or terms may be defined by the court. So, in order to keep pace of judicial pronouncement, the act also was amended many times. The current Income Tax Act 1961 has various provisions and number of explanations in the sections, right? So, because of all this, this Income Tax Act has become bulky. Now, why so many amendments were made over a period of time? Because the IT Act is dynamic and also it should be adaptable, right? Amendments will be made over a period of time, keeping in view the political and socio-economic realities. For example, at one time, our foreign exchange reserves have fallen to very low level. At that time, in order to earn valuable foreign exchange, the then government thought that exports ought to be encouraged. In order to incentivize the export, a new section like 80HH and 80HHC were introduced in the Income Tax Act. At one time, the then government thought that infrastructure in the country needs a boost. So they have introduced a section called 81A, which will incentivize the infrastructure SSAs. Okay, those SSAs who are engaged in providing infrastructure activities. Now, the government has thought fit that time has come to review the Income Tax Act 1961. Now, what is the reason for this thought process of the government? The government has thought that the act has become intricate over a period of time with various amendments, and also it has an intricate language as it was a traditional drafting. And it also has some elaborate structure, some jargons are there here and there. And also, this act is very voluminous in nature. Now, what is the objective for which the government thought fit that the existing act should be reviewed? One of the reason is they want to make the existing law concise. They want to make it lucid. They want to make it easy to read and comprehend. So they want to make it concise, lucid, as well as easy to reach and read and comprehend. And also they want to remove the ambiguities with a view to reduce the disputes and litigations. If there is a ambiguity in any law, that will lead to dispute and litigation. So they want to address that concern. And also they want to review the procedures and make it simplifier so that the stakeholders will be happy. And they also want to provide certainty to the taxpayers. Okay. Now, what is the aim and the scope of the new bill? They want to remove the redundancies. Wherever there are redundant provisions, they want to just remove that provision or provisions. They want to simplify the language. We will understand at a later point of our discussion, wherein how was the language in the 1961 Act and how the language got simplified in the current new income tax bill 2025. They want to improve the structure and rationalize the provisions, and they want to improve the readability above all. So, next, friends, now in order to make this review of the income tax bill, Honorable Finance Minister in Union Budget 2024, which was presented in the Lok Sabha on 23rd of July 2024, announced that a comprehensive review of the Income Tax Act 1961 will be made. And the finance minister at that time has set a timeline, and that timeline is 6 months. That timeline is 6 months. Now, what is the process involved in drafting this new income tax bill? First of all, since the time limit set is only 6 months, the planning has been initiated and a core committee was formed. And initially, six subcommittees were set up in the first week of August 2024. Thereafter, 14 more subcommittees were added, and thereafter, another two subcommittees were also added during September and October 2024. By November 2024, the total subcommittees rose to 26. Now, in by December 2024, all the committees submitted their draft to TPL division, meaning Tax Policy and Legislation Division of CBDT, and they have coordinated with the Ministry of Law and Justice by December 2024. Now, we will look into the drafting of the new income tax bill. Previously, if I remember correctly, in the year 2009 and in the year 2019, actually two draft income tax bills, actually two new bills were drafted around in the year 2009 and 2019. Okay. Now, this committee also studied those two draft bills, and also they have made a bit of research. They went in touch with the UK and Australia. Actually, UK and Australia have already attempted to simplify their income tax laws. And also, they have consulted with the stakeholders like industry professionals, associations, taxpayers, as well as the tax officers, right? Now, what they have done is they have also made consultations with those who have already simplified their tax laws, income tax laws, and also a study of national and international guidance material for simplified legal language have also been referred to, and they made consultations with the Office of Simplification Project UK, Office of the Simplifications Projects UK, right? Now, the finance ministry also made consultations with the stakeholders. They have sought online suggestions for simplifications, and around 20,976 responses were received, out of which 1,807 suggestions were for simplifications, right? Now, all these suggestions have been catalogued and the suggestions have been analyzed, right? Let's compare the existing Income Tax Act 1961 with the proposed new Income Tax Bill 2025. Friends, the size of the act will be reduced to half, nearly half. Okay, this was also announced by Honorable Finance Minister recently while introducing this bill also. Now, in the previous Act 1961, the number of words is 5.12 lakhs, and you have a drastic reduction to 2.6 lakh words. Previously, the Income Tax Act was 47, it was bulky. Now you will have only 23 chapters. Previously, there were 819 sections, but you will have 536. So we have already understood what is 298 and 819, and now it will be 536. Previously, there were 18 tables, but now you have 57 tables. Here it has increased. They want to do away with ambiguities. They want to make it simple to understand. So instead of legal jargon of words, they thought that if the law is represented in the form of tables, then they thought that it will be easy to understand. And previously, in the 1961 Act, there were many provisos and explanations. And now that all the provisos and explanations have been removed, but they are accommodated into subsections or clauses, right? Now, what are the features of the new Income Tax Act? Rest assured, you will have a simplified legal language. It will be easy to understand and comprehend with the tables and charts. Consolidation of provisions have been made wherever possible. Redundant provisions have been removed. We also will understand with examples how all these have been achieved. Let's take the example of consolidation. If we take one example for consolidation, let us what has been done is previously in relation to a particular, for example, you take the trusts or charitable institutions. Now that the new income tax bill won't use this terminology, but they have changed it to registered NPOs or registered non-profit organizations. Previously, in the 1961 Act, the provisions relating to these entities were scattered and were at different places. Now, what has been done is all the provisions relating to the NPOs are brought into a single place, into a single chapter. So, if you want to understand the taxation of a registered not-profit organization, earlier terminology being charitable trusts or associations, all of them have been brought into a single chapter. For example, previous in the 1961 Act, definitions were there in Section 2 and also in various sections or chapters, etc. But now, almost majority of the definitions have been brought into Section 2 of the new income tax bill. Now, the language has been made simple. Let's take an example of Section 80C of the Income Tax Act 1961. It, uh, it is like this. In computing the total income of an assessee, being an individual or a Hindu undivided family, there shall be deducted in accordance with and subject to the provisions of this section the whole of the amount paid or deposited in the previous year, being the aggregate of the sums referred to in subsection 2, as does not exceed 150,000 rupees. Blah 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 blah, very confusing, right? Now, how does this provision read in the new income tax bill 2025? An individual or a Hindu undivided family shall be allowed a deduction of the amount paid or deposited in a tax year. Of course, the concept of a previous year and assessment year will not be there in the new income tax law. Actually, many get confused with that assessment year and previous year. Now, there are no two types of years, only one year, that is the tax year, and it will be the financial year, right? Up to 1,50,000 as per Schedule 15. This is made simple. You can examine here, almost this provision has become half. And it is somewhat simple to understand also. The language is also not a sort of a traditional one, but a simple modern language. Modern, of course, legal language. Now, previously, if you take any section, it may have a subsection clause and also it will have provisions and explanations. For some sections, there will be more than one or two provisions also. Like in section 2, you may have provision. Again, it will say provided further. In the next paragraph, it will say provided further that. After this is complete, you will get a explanation in the next paragraph. That will also run into explanation 1, 2, 3 like that. But now, in the proposed new income tax bill, the provisions and explanations have been completely removed. Wherever necessary, they are accommodated into subsections. Reference will also be very easy. Previously, you may have to refer to provision 2 of subclass 4 of subsection 2 of section 15. Just for the sake of example, I am saying like that. But now it's very simple. Even to that extent, you can simply say that subsection 4 of section 15, like that. Don't take it in a real sense, but only for the sake of example, I have referred that number, right? Now, the new income tax bill, what we have already seen is the number of tables or charts have increased when compared to the 1961 Act. This has been made to make the law unambiguous and they want to make it easy to understand and read. For example, in the 1961 Act, for TDS provisions, you have section 194, 193, 195 non-residents, 192 salary, and TCS 206, etc. Now, what they have done is they have introduced a table or a chart, and what it will say is one table will say TDS for residents. Another table will say TDS for non-residents. Another table will say no TDS required. Now, previously, for residents, some TDS provisions are applicable. For non-residents, some TDS provisions were applicable. So they are in between. Now, for example, if you are dealing with a non-resident client, you will directly go into the table of TDS for non-resident. Okay, it is like that. Next comes what provisions remain or what has remained unchanged. There is no change in the tax slabs. There is no change in the tax policy. Whatever keywords and phrases are defined in the court readings, they were never touched or meddled. They were kept because it is a settled law. So again, redefining them will create or cause new litigation. So in order to avoid that, the jurisprudence was never touched. And the certainty for tax loss provisions for all has been ensured, and the income tax bill only simplifies the existing income tax act, but there is no change in the policy or there is no major change in the tax law. The policy will be like that. The rates of tax will also be remain unchanged. Only thing is the act is simplified. Thanks for watching. See you next time.